If you were scrolling through the headlines today, you might be feeling a little nervous about your wallet and your savings. In case you missed any of it, allow me to be a human doom scrolling for you. McDonald's reporting its worst quarter sales since the COVID pandemic and a pullback in sales from low income and middle income customers. General Motors expecting Trump's tariffs will end up costing the company up to $5 billion as the company slashes their projected profit guidance for the year. The last ships carrying non-tariffed goods from China are starting to arrive here in the United States, meaning that very soon, economists project, consumers could start to feel price hikes or notice empty shelves. On top of all this, tomorrow we're going to get the April jobs report, which will give us a clear look at how the economy is coping with Trump's tariff launch and DOGE cuts simultaneously. We can hope for good news there, I suppose. Those are just some pieces of the economic puzzle that we're trying to make sense of. Joining us now to discuss, Oren Cass, he's the chief economist at American Compass. And Oren, to those of us who are not economists, things seem a little grim right now. Can you give us your gut check on what all of this might mean for the American consumer?
Sure. Thanks for having me, Jake. I thought that was a little bit of a bizarre lead-in for the day that brought the stock market back up to positive territory for the last month.
Well, there you are. There you go.
I
Thank you so much. Appreciate it.
and that's the end of the segment. I don't think the stock market is the right measure necessarily of the health of the economy. And among other things, I think, there could be very good economic policies that do lead to drops in the stock market. But I think if you're asking what do people make of the last month, all things in, what you're seeing is sort of certainly there was a lot of volatility and disruption initially, but things have really calmed down since then. And I think, as you said, we are about to see the effect of the China tariffs hit fully, and we should expect some disruption there. We obviously became totally dependent in some cases on Chinese production for some things, and that's not a good thing. And reversing that is going to have costs. But I think it's very encouraging to see us moving in a direction where we make some trade-offs and we say, look, we dug ourselves a hole, and we're finally starting to climb back out of it.
Here's what the Treasury Secretary Scott Bessent highlighted in yesterday's cabinet meeting. Take a listen.
Energy costs have plummeted, mortgage rates are down, food costs are moving lower, and American families are finding their financial footing again.
Do you agree with his characterization? Do you think American families feel that they're regaining their footing?
Well, I think the statistics he cited were correct in terms of how American families are feeling. I think we're going to have to see what the results are as this plays out. On one hand, a lot of the data looks pretty good. On the other hand, I think we've seen hits to business confidence and consumer confidence that, that's not a good thing in itself, and certainly it can then drive costs and a slower economy. So I think the important thing is to not sort of wildly overreact in any particular direction, and instead to look at what's happening, and also to continue pushing for good policy. I think the China tariffs are a perfect example where right now we probably are pushing the pedal down harder than we need to. I think the goal has to be to stop relying on China over time. And in a sense, what matters the most is what will the tariff be 3 years from now, so that investors start reacting accordingly. I think if we can get people focused on that, get people accepting things are going to change and thinking about how to do that transition well, in the long run, we'll be very glad we did this.
Yeah, we've been talking to small business owners from coast to coast, trying to do one every day if we can. And some are supportive, some are worried. The ones who feel the most heard and the most supportive are people like the shrimper that we spoke with yesterday in South Carolina, who is just fed up with the unfairness of his industry because of the unhealthy shrimp that gets dumped from India, et cetera, into the United States. But a lot of people, even Trump supporters, are just worried because of the uncertainty, because of the unpredictability. What do you say to them?
Well, what I would say is that we made a decision about 25 years ago when we embraced China and said we want to have free trade with China, we want them to be in the World Trade Organization. That of course unleashed enormous amount of uncertainty and huge costs. We saw offshoring of entire industries. We did get a lot of cheap stuff, but we've paid a really major price for it. And the question now is, are we happy with that decision, or would we rather make a different trade-off? And so if you're happy with how things have gone, if you think the cheap stuff from China is great, if you don't care whether we make things in America, then you might be disappointed by changing that. But if you regret that decision, if you wish we'd made a different one, if you want to see us make a different one now, then I think it's entirely fair to be concerned about the costs that we're going to face in the short run. But we have to think of those as an investment. And if we want to make a different choice and be on stronger footing for our economy for the long run, then it's an investment worth making. And we have to have that longer term view of where we can get to.
Aside from China, the White House is arguing that the trade deals with other countries are coming. Take a listen to the director of the White House National Economic Council, Kevin Hassett, on CNBC this morning.
Secretary Lutnick and Jameson Greer are making progress with numerous countries. I think it's more than 20 now, where we actually have hard offers on the table. I'm sure there'll be news by the end of the day.
So you don't know if it's who's first, if it's India or South Korea or what's going on with Japan. Can you tease us? Can you give us anything? Can you dangle?
I think I know, but I can't tease.
No tease, no dangle. But do you believe that some of these deals are actually going to happen and soon, and they're going to be able to provide some economic relief?
I certainly expect to see some deals happen. In a sense, the best precedent for this is what Ronald Reagan did with Japan, I guess almost 2 generations ago now, where we had in Japan a trading partner that was pursuing a strategy that just was not good for the United States. And in something like, cars, we were seeing all of these low-cost imports come in, and we negotiated under the threat of tariffs. We made a deal. They decided to limit their exports to the United States, and they told Honda and Toyota, go set up shop in America instead. And that's where we got the tens of billions of dollars of investment, the hundreds of thousands of jobs in the American South, and now an entire auto industry there. It's so much that the Toyota Camry has more American-made content in it than almost any American car. And so I think those are the kinds of deals we should be looking for, and they absolutely are plausible. They've happened before.
I do want to get your reaction to what President Trump said yesterday when asked about the state of the economy. Take a listen.
Maybe the children will have $2 instead of $30, and maybe the $2 will cost a couple of bucks more than they would normally. They have ships that are loaded up with stuff, much of which, not all of it, but much of which we don't need.
I don't know about you, Oren. I'm a connoisseur of New York Post covers. This is one in reaction to the $2 instead of $30. It's a skimp on the Barbie. Pretty clever. But I think one of the questions I have for you is, what about what President Trump said? I mean, you acknowledged disruption. He's acknowledged disruption. But there is real pain and fear. And is it really just $2 instead of $30, or are there the changes you're talking about? Aren't they bigger than that?
Well, in a sense, they're a lot less big than that. I mean, $2 instead of 30 would, you're talking about what I guess a doll costing 15 times as much. I don't think that's the sort of effect that you're going to see. I think what you're going to see is that there will be certain areas where we are extraordinarily dependent on China and we don't have good substitutes. And so in the short run, you'll either see prices on some of those things go up significantly. Maybe a doll is one of them. But for the most part, what you're going to see is, first of all, businesses finding other ways to solve their problems, finding other sources of supply, and also taking more seriously the option of U.S. sources of supply. And you're going to see consumers choosing among the options available to them those options that aren't dependent on China. So if one kind of doll only comes from China, and there's a different doll or a stuffed animal that also comes from another country, you're not going to go from $30 to $2. You're going to go from just buying dolls to maybe buying more of something else. And so I don't want to minimize. I think, as I said, there's certainly disruption here. There's certainly cost. But I think we have to do a better job of asking, which of these costs are there really any potentially catastrophic ones? And let's figure out how to anticipate and avoid those. But let's also accept that some shift in the kinds of things we buy is in fact a good thing if what we're talking about is being less reliant on China and hopefully also making more things in America.
All right, Oren Cass, thanks so much. Appreciate your time today, sir.